Now we come to the part of the show where I believe, when I actually talk a bit about what I believe is important for individual investors to consider over the next couple of weeks and at this point in time into year end before they make their investment decisions. I think you should be watching some economic data. We've had a lot of economic data come out on the calendar, a lot of it in the US, some of it in Canada. I think you also want to take a look ahead to the markets in 2024. I think if you're making investment decisions today, you want to make those decisions based on how you think things are going to go in 2024, at least the beginning of 2024. And lastly, I think you also want to take a look at stock valuations. What are certain investment ideas trading at? Are they getting a little expensive? Are they still cheap? What are these valuations for these investment ideas? And I think those are the three things you want to consider. So let's take each one on their own at one at a time. Economic data. Now, we've had a lot of economic data recently. We've had a jobs report out of the US, most recently this past Friday. Still fairly strong jobs growth. We have jobs growth out of Canada, again, fairly strong. We've had CPI data or inflation numbers come out of the United States yesterday, showing that inflation is coming down a little bit. Ticked down from 3.2% to 3.1%. We had PPI, Producer Price Index, which are your wholesale prices, also showing some weakness in inflation just this morning out of the US. So here we have a chart of the US Consumer Price Index, and you can see exactly what I was saying. When you strip out volatile energy and food prices, the core rate is still 4%, so a little higher than the Federal Reserve would like, but the headline number is now down to 3.1. It would be very nice to see a number coming in below 3, something with a 2 in front of it. I think the market would get extremely excited if we started to see numbers in the 2s, because we know that 2% is what the Fed and Bank of Canada, for that matter, are striving for with respect to inflation. The next chart we have here, actually, we can put that one up as well, is the Bank of Canada overnight overnight interest rate versus inflation. And you can see here again that our rate of inflation is also in and around 3.1%. And you can see here that the Bank of Canada rate is significantly above that, 5%. So again, we have, or the Bank of Canada, I should say, has a lot of wiggle room if the economy should continue to slow. And we're seeing it slowing in Canada a lot more than in the United States. I think that the central bank would have enough wiggle room here to bring down the bank rate, the rate that they charge the banks, and then therefore the banks would bring down the prime rate, which is, as we know right now, is over 7%, as the finance minister said in his interview, 7.2% to be exact. So if the central bank, Bank of Canada, lowers their rate, banks will lower the prime rate as well. And things such as mortgages, lines of credit will become just a little bit more affordable right now. And hopefully that would help stimulate the economy. So first thing I want everybody to consider before you make those investments in the next few weeks is what's going on the economic data and how that economic data will affect interest rate policy and where interest rates go in the coming few weeks. As I said on our list there, look ahead into 2024, I think is extremely important, figuring out what the market trend will be heading into 2024 and at the start of 2024. And to me, I think the trend will be to see greater market breadth. Or another way of saying it, I think we're going to see gains in other areas, not just technology like we saw. We know the Magnificent Seven stocks, the largest 7 tech stocks today, made up so much of the gains that we saw this past year. It's making up so much of the S&P 500. Almost 30% of the S&P 500 today are just these 7 stocks. So one of the market trends, or I think the dominating trend for 2024, will be a broadening out of some of the growth into other areas of the market. So not only do we just have to own some good quality tech names, but I think you should own some good quality banks and pharmaceuticals and retail, even maybe the odd sprinkling of some oil names as well. Different areas of the market I think are going to join in on the party, or join in the party, crash the party, if you will, and also move higher. We're already seeing it happening right now, November and December, or here we are about halfway through December, last month and a half. We've seen a number of names in other areas other than technology start to do well, especially banks. Canadian banks have moved higher. US banks have moved a lot higher. Insurance names have moved higher as well. So we're starting to see a broadening out. And I think this trend will be very obvious as we head into 2024. A few charts we have to show that we've seen before. Magnificent Seven dominating the market. We've seen these charts, I think, on previous shows. First one, or actually we have both of them there. On the right-hand side, you'll see the Magnificent Seven, or we call them now the Mag 7. We actually make short forms of everything in the financial world. And you can see here Meta, formerly Facebook, Amazon, Apple, Microsoft, Google, or now Alphabet, and Tesla and Nvidia. And you can see that these 7 companies made up just over 70% of the growth that we saw this year on the S&P 500. The left side there, that chart shows us that these names make up almost 30% of the S&P 500, and it is unbelievable. You know, Goldman Sachs was quoted recently as saying they had never seen this type of concentration ever before in the stock market. So we're living through a time that we've never seen before, domination by these stocks. The third thing that I think individual investors should consider before you make your investment decisions are stock valuations. And I think the best illustration I have for stock valuations is the first chart we have here, again on the Magnificent Seven. You could clearly see that many of the Mag 7 are trading at high valuations, high PE multiples. You're looking at Amazon 50 times, Apple 30 times, Meta, Alphabet in the 20s, which is a lot cheaper, Microsoft a little expensive, 35 times. Look at Tesla, 73 times. Unbelievable. So I think before you make your investment decisions, you want to take a look at valuations. Now, I will say that if a company is growing profits by 40% with a PE multiple of, let's say, 23 times, then I think that actually makes sense, right? You want to buy a company that is showing growth higher than what your multiple is, what your company stock is trading at. And so I think you'll find that names like Alphabet, Meta, two of the names that many people talk about that are still relatively cheap as compared to the growth that we see in these names going forward. Another one is actually Nvidia. Nvidia, once upon a time, traded at 50, 60 times earnings. Today, earnings on a forward basis, multiple is around 25, 26. And yet they're still growing well above that. And so for many, Nvidia has been a name that they've been adding to over the last, let's call it, 6 months or so. Another chart I have here, again, illustrates valuation of the Mag 7. And you're looking at the Mag 7 or the Magnificent 7 versus a lot of the other indices or index that we could see, the S&P 500, S&P 500 equal weight, EFI, which is your international markets over in Asia, MSCI as well, emerging markets. And you can clearly see even an emerging market index trading at 14 times, the Magnificent 7 well above that at 35 or almost 34 and a bit times earnings. So valuations, I think, is so important before you make your investment decisions. So you want to look at other areas of the market, not just the Mag 7 for growth. There are a lot of areas, as I mentioned, in banking and pharma and other areas in retail that I think are pretty compelling. Some valuations are pretty compelling. A lot of these stocks, in my opinion, are trading at pretty good levels, pretty cheap, on sale, and are still showing some good growth. So to me, over the next couple of weeks, I think if you, as an investor, if you focus on those 3 things before you make your investment decisions, I think those are a good starting point to help build out your portfolio for today and over the next 6 to 12 months.